Hello and welcome to the day ahead. It is Friday, May the 2nd. I'm Andrew Gagan. Well, the local share market is set for a negative opening with ASX futures off around 0.4%. Global equity markets were mostly higher overnight as investors focused on earnings results. All three major US stock indices began the month in positive territory, with the Dow and S&P posting their 8th straight session of gains after strong results from mega caps Microsoft and Meta. After the bell, Apple reported earnings and estimated that tariffs would add about $900 million in costs to the June quarter if rates don't change. It reported weaker than expected sales from China, with revenue down 2.3%. Apple shares were down close to 3% in after-hours trade. And Amazon reported first quarter cloud revenue growth and forecast operating income below estimates, which saw its shares fall around 5% after hours. Amazon Web Services, the company's cloud unit, recorded an almost 17% increase in quarterly revenue. Shares in Microsoft surged after delivering an upbeat quarterly growth forecast yesterday for its cloud computing business Azure. The gains briefly pushing Microsoft above Apple to become the world's most valuable company. And Meta also gained after posting higher than expected revenue on the back of strong advertising performance. Mobile chip designer Qualcomm plunged after it forecast a hit to revenue from the trade war. Software giant Atlassian reported revenue was up to $1.4 billion. That's up 14% year on year for the quarter, while it reported a net loss of almost $71 million. The company's stock falling in after-hours trade some 15%. Eli Lilly's quarterly results topped expectations, but shares tumbled after CVS Health's decision to drop its obesity drugs a pound from some lists of medicines it covers for reimbursement. And McDonald's earnings disappointed with a surprise drop in first quarter global sales. Well, the ISM US manufacturing report for April came in better than expected, but still fell to a 5-month low and remained in contraction. The survey's measure of prices paid by manufacturers for inputs rose to the highest in almost 3 years and showed tariffs on imported goods are straining supply chains, maintaining elevated prices for inputs. ISM commentary noted that prices growth accelerated due to tariffs, causing new order placement backlogs, supply delivery slowdowns and manufacturing inventory growth. And US weekly jobless claims rose more than expected, potentially hinting at a pickup in layoffs from tariffs, which weighed on the economy in the first quarter. Meanwhile, the Atlanta Fed's GDP modelling of Q2 growth has been revised lower from an annualised rate of 2.4% down to 1.1%. US Treasury yields rose from the three-week lows, the US 10-year up around 5 basis points to 4.22%, the 2-year jumping around 8 basis points to 3.72. And the US dollar has continued to bounce back on technical buying, with investors more optimistic about tariff deals between the US and its trading partners. The Aussie is currently down to 63.8 US cents. And Bitcoin has risen above $96,500 US. Oil prices settled nearly 2% higher after US President Donald Trump threatened secondary sanctions on Iran after a fourth round of US-Iran talks were postponed. Brent crude futures settling at $62 a barrel. Copper is up around 0.5%, while iron ore has fallen back to $95 a tonne. And the gold price is steady to close at $3,287 an ounce, having fallen some 6% from its all-time peak of $3,500 2 weeks ago. Locally today, we get the March quarter producer prices and retail sales. That is your day ahead. See you again on Monday.